More now on our coverage of courageous calls. Analysts who bucked the trend and issued sell recommendations right before a stock price drop. With us now, Daniel Oppenheim from Credit Suisse. Daniel issued a underperform rating, translates sell, on Pulte Group just before its shares plummeted in 2009 and 2010. Dan, you're pretty parsimonious with your buy ratings. You've only got 2 right now, and you've got 5 underperforms. The rest are market perform. Tell me, when you look at the home building industry and the material suppliers, the stocks that you covered, you think that the next leg is going to be up or the next leg is going to be down?
Well, in general, we think it's going to be very choppy, and so we think there'll be lots of trading opportunities. We'd seen the stocks rally ahead of the spring. Then as we've gotten more into the spring selling season, I've seen the stocks pull back a bit. Would expect to see more of that. Think it will be a challenging time for the stocks going forward, and think there may be some challenges ahead, given that the spring season is looking to be a bit more difficult than some would have expected, and is now leading to some pricing pressure in the housing market, which is never good for home builders.
Dan, speaking of the housing market, I mean, if there's one data point, and please forgive the simplicity, that you're looking at to say, okay, the worst is over, we're on our way to a turnaround, what is it?
I think if looking at affordability, and that's clearly a great measure at this point, in that if we think of what it is in terms of monthly payments for buyers right now, in many areas it's now cheaper to own on a monthly basis than it would be to rent. That certainly says we're getting much closer to the bottom. There's still a lot of excess inventory out there, but much closer to the bottom than we have been, so not too much longer here.
And when you talk about affordability, I mean, what role are the banks playing in that?
Well, I think it's still difficult to get a mortgage here, especially with some of the tightening for the FHA-insured loans. But I think it's still just 3.5% down payment on those FHA loans, so it's not terribly onerous. Some challenges, though, in terms of higher FICO scores and such. That is a bit of an impediment, but we don't think that we're going to go back to the credit as it was in the 05-06 era.
Which is a good thing, right?
Right, exactly.
Dan, is it easier to be courageous after the financial crisis? Are investors more receptive to sell recommendations? Do you find that you're under less pressure from the companies that you cover when you have an underperform rating?
We haven't, in general, seen that much pressure from companies, and with the housing sector as it has been, I'd say it's there hasn't been so much pressure to avoid sell ratings given the fundamentals of the industry. I think when we at first got negative on the sector back in 05, there's much more question about it at that time, but certainly not a ton of pressure here. I think the real challenge for us is just to be right on the stocks, not so much just how it's going to be viewed by the companies we cover.
So you're not getting frozen out in any way by the management teams that you cover when you have an underperform rating?
Generally not.
All right, well, that's good news, I suppose. Dan, thank you for joining us. Dan Oppenheim, one of the courageous callers, puts sell ratings on stocks before they drop, makes money for investors. He's with Credit Suisse.